Hello, everyone, and welcome to the Your Mark on the World show. Our guest today is Robert Rubinstein. He's the chairman and founding partner of TBLI. He's been doing impact investing before impact investing was a thing. You don't want to miss this episode.
Welcome to Your Mark on the World, bringing you another changemaker with champion of social good, Devin D. Thorpe.
Thank you so much,
Robert,
Devin, for having me.
Welcome to the show. We're thrilled to have you. Thanks for joining me.
My pleasure. Thank you.
So, Robert, you've been, you launched TBLI back in the 90s, right?
Yeah. Prior to that, I started the first European magazine on sustainability in '95. So, yeah, I've been doing it quite a long time. I mean, at that time, it was quite a wasteland. There was nothing. There was no PRI, CDP, EVPA, Eurosif, nothing.
Yeah.
So it was, everybody thinks that the European asset owners and managers jumped up and gave me a big hug and thanked me for doing this. It wasn't at all. It was heavy lifting. It was quite hard.
Take us back to that time just a little bit. Give us a sense of the landscape. The impact investing wasn't a term I had heard in the 90s. I don't think people started using that term until maybe a decade or 15 years ago, well into the 2000s. So what did it look like from your vantage point trying to do what so many are doing now? What did it look like in 1995, 1998?
Well, there was, to give you an idea, there was one in the UK which completely dominated the SRI. It was called SRI at the time, Social Responsibility. It was UK completely dominated the market, and there was one company that had 70% of that market. And then there was a vast wasteland throughout most of Europe. It was mainly out of the UK and a little bit in a few other places, but it was mainly faith or avoidance related to listed equities. Most of the pension funds were doing nothing. I remember when I was publishing my magazine, I would give a talk to some asset owners and managers. I put out free copies. They were afraid to touch it. They thought they might get some illness or disease. So most people were not that embracing. They were curious, but they were not serious. There was very little product. You had the UK, which was really way out ahead of everyone else. The Netherlands hadn't really started to get going, and there was nothing happening in Germany, France, Italy, most of the Nordics. It was just not an issue. It was just, let's just invest to focus on financial return and not look at the other stuff. As we moved forward and people started to come and they met some of the thought leaders that we were able to bring, they say, oh, this guy Devin actually understands finance. Maybe there's something here. Maybe looking at all of the risks, not only financial risk, but looking at the environmental risk, the social risk, the governance risk, and then later the climate risk. Maybe that's a better way of managing our money. So it was very rough, but miracle of miracles, the first year we did it, we made money. And wow. It was a shocker because I had to do it. I had no money, I had no resource, and I did it at a university in Rotterdam, Rotterdam School of Management. And they thought I was going to be a failure. So they made me sign in a document that I would take all personal liability if it, lost money. And to their shock and horror, we agreed we would split the profit. And I had to keep bugging them about paying the profit because they couldn't believe that it made money the first year.
Yeah.
So it was, people were curious. There wasn't the level of assets what you have now. There was very little, very few people were doing things other than maybe Triodos and ASN Bank, which no one's ever heard of, which is the market leader here in assets under management for ESG.
Robert, what have you done that's worked over the last 20 years to shape and form the impact investing arena?
Oh, that's easy. I've always focused on, I'm saying this jokingly, I always focus on irresponsible investors and criminals. Mainly everyone who's not doing this, so not on ethical investors or impact investors. And I always communicated in their tribal language. So I only show them self-interest, opportunity, and money flows. And there is no group more predictable than the financial sector. It is the most predictable group in the world. They all kind of run up the hill and jump off the cliff at the same time. So getting the behavioral change was never really a challenge as long as you communicate in their language. A mistake that many people made, they focus on the moral imperative. But if you have a target and you don't reach your benchmark, you're fired. But you could have reached a moral imperative. And many people just forgot that. They kept pushing the moral imperative and they say, hey, dude, this guy has a mortgage and, you know, he's got to reach his target. So showing them how they can achieve their targets, their benchmarks, their requirements, their mandates, and having a social environmental added value became easier because you're speaking. It's just the mistake people made is they shouted loudly in Chinese to someone who spoke German. and financial sector have a jargon. They speak a certain language, but they are predictable. And, you know, anybody that I ask, do you want a financial return with a social environmental added value? I never got an answer. Oh no, I want all my money to make life miserable for everybody. And I'm doing that 24/7.
Yeah.
So that's why that worked, because we focused on the institutional investors. And now the last few years, we've shifted a lot toward family offices and high net worth and endowments. And if you communicate in their language and you are authentic and you're not hustling something else, I mean, we are totally independent. We have no affiliation with any trade association at all. And we did that specifically to be independent and non-conflicted. And if you do that, but you can imagine the work is farming. The financial sector are hunters. They're incentivized for short-term behavior. So teaching farming to hunters takes time. But if you stay the course and you dig the hole and you keep doing that over and over again, I always say we're an overnight success after 25 years. You will get through because the financial sector starts to see that this is in their interest.
Yeah. So Robert, what are the keys to successful impact investing? Successful being having real impact and hitting your target returns.
Yeah, well, we don't, at least TBLI does not use what a lot of organizations or trade associations throw around about impact and the definition of intentionality and things like that. Because two of the sectors that we focus on, which are some of the largest in the world, is public transport infrastructure. They have to raise 2.3 trillion a year. It's steady cash flow, no volatility, low carbon, zero carbon in some cases. It's AA rated, it's public-private partnership. It ticks every single box, but it's not on the list of people when they think about that. Or community banks, which 97% of the US banks are community banks. And many of them target the specific interest. Secondary market of development finance institutions, fuel-free energy. So we focus on things that offer scale. You know, real estate. We're involved in some of the largest real estate projects that ticks every single sustainable development goal box. So we're focused on scale and always have, because you cannot get a CalPERS interested in a $10,000 microfinance project or a hospitality school in northern Thailand. It's just, they can't do that, you know, so you have to package it in a way that they can move zeros. So our focus has always been self-interest, opportunity, and money flows and scale, showing them that they can move lots of zeros. And when they see that, and they can have a reduced risk, and now that carbon is a cost, the herd is moving. So we haven't, too much of the impact space is only about smiling children drinking milk in Tanzania as the only form of impact. That's a form. It's not the only form. So our definition is broader because we want to switch to a values-based economy, an economy based on well-being, and a low to zero carbon economy. And you can't do that on small scale. You got to do big time.
How do you see the future of impact investing unfolding as you think about the next 20 or 25 years?
Yeah, I think there won't be a word. Impact, I think, is a bad term because people get this impression that impact investing is money losing, philanthropy, charity, there's no good deals, there's bad management. So all of these myths, and I throw back the myths about, oh, you mean like hedge funds always making 30% every year, year in, year out, or private equity funds always making 30%, or all fund managers reaching their targets? Those myths we should accept, but the myths about impact we should also accept.
Yeah.
So yeah. I think there won't be a difference because people will see this is a rational, intelligent way of weighing all the risks and providing a return that is not only for a very, very small group, but is offering returns to many. The society, the environment, and as well as the shareholder. So I think ultimately people will see this is just a smart way of doing it, and it'll be just part of the investment process. You'll still have people who don't really care, and I work with a network of faith-based organizations who had lots and lots of assets, and they were worried about returns. I said, well, just get into child trafficking and human trafficking and weapon smuggling and drugs. Oh, no, we can't do that. So I said, well, then you do have values. You can actually achieve these returns that you need for whatever, for your pension, and you can also reduce your risk. And now carbon is a cost, and that will speed this up. So I think long-term, there won't be a distinction. And at the moment, impact and the SDGs are the flavor of the month. People are moving. The real problem is that in the illiquid space, there's no infrastructure. So it's very hard for asset owners to find what they're looking for. There's hundreds of platforms, but there's no connectivity between them.
When we think about carbon having a price, you've mentioned that a couple of times. Here in the United States, under the leadership of President Trump, carbon doesn't have a price. Carbon is free. We're going to increase our production of oil and natural gas and especially coal. How is carbon being priced in a way that's meaningful? In and out of the United States.
Most of the energy companies already have an internal accounting system, and they already calculate carbon. The fact that Washington and only a small group of non-empathetic politicians believe that climate is a fake and it doesn't have has nearly no influence whatsoever on institutional investors, because most of the institutional investors are looking to decarbonize portfolios at scale. So what Washington is doing is not reflected in what's happening at the regional level or at the institutional level. The money flows going into fuel-free energy, or what's called renewable energy, I prefer to call it fuel-free energy, is significant and moving forward. So you can do all of the things that you want, and you can draw all the lines on the ground that you want to get people going in this direction. But if they don't want to go in that direction and they want to go into a low to zero carbon world, that will happen. So I'm not really bothered by that because, look at Peabody Coal, look at the coal companies. They're not good. You can dig out all you want, but not more people will be buying coal.
Yeah.
So it's just it's a new era, and then you start looking in at all of the electric cars that are being sold. You look at all the renewable energy going, and basically people look at the macro impact of the emerging markets. If you look at China's growth of 6 to 8%, if it's true, and then you look at all of the commodity consumption that they're going to need of 40 to 60 million barrels of oil a day at this level of inefficiency, and then you add India and the other 3 billion emerging markets, you do not have to be a Nobel Prize winner to figure out, this line, it's not going to go up anymore. We're going to go down. So the only way to keep that line up for a long term is massive, massive resource efficiency, which is what sustainability is about. And that's what the market is getting, whether it's the BlackRocks or JP Morgan or Goldman Sachs or the European pension funds or the Japanese, they are starting to see that. And the question for them is there a product package for me that I can move money? You know, they need to have it practiced, and that's happening. So I'm not really bothered by that. I'm more concerned of the lack of empathy, you know, of actually hearing politicians stand up. Well, if you can't afford to pay for healthcare, it's not my problem. I mean, I could never even imagine the most outrageous comment from the right in the Netherlands, Germany, France, the UK would ever say that. That I find more disturbing, rather than they don't want to believe in climate change. It's not going to impact the financial sector because they're moving in the other direction.
No, that's such an important message. Robert, you had a phenomenal career. What is the most important lesson you've learned?
Be patient and do not give up, because there were many, 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 many dark days. I mean, we've gone through, you know, the tsunami, the earthquake, the nuclear disaster. We did our event in Tokyo then. Hard operations right before a conference in Asia, 9/11. We've gone through many, 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 many of these disturbances. You just have to stay the course and be true and be the farmer, you know. And if you stay the course and don't give up and stay true, but it takes longer, you know. Everybody wants to cut ahead of the line. And I used to teach MBA students, and they all wanted to cut ahead of the line. They didn't want to really learn anything. They just wanted to learn tricks to cut ahead of the line. You got to wait in line. Wait in line, pay your dues, study, keep the faith, and stay focused. And long term, we'll get there, and we are.
Yeah, amazing insight, Robert. You've devoted your career for 25 years to sustainability. You're obviously a bright, capable guy. You could have done anything, and I suspect there may have been things you could have done that would have made even more money. Why was it so important to you?
I was never fulfilling the other things. I mean, I started the first bicycle magazine in the Netherlands. It was a big financial and spiritual success. The other two publications were only spiritual successes. But I always got great fulfillment in helping move the equation. And I'm a good chess player, and I'm a good connector, and I'm very authentic. So it just felt right. I guess my parents raised me in a certain moral compass. And this just felt good. It cost me no energy. And anything that you do that costs you energy is the wrong job. And anything that you do that gives you energy is the right job. So this always gave me energy, and it always felt good. And I love, giving talks. And my greatest joy is having dinner with Donald Trump type investment managers who hate everything about sustainability, because they are the easiest to convince, believe it or not. They are absolutely, because of the predictability. So it's just been, it's fun, it's enjoyable. It's been a rough ride, particularly with the financial crisis. That hurt us really, really bad. There were many times we were close to the cliff, but, we stayed the course and adapted, and the herd is now moving in our way. I've never gotten so many people who are interested in what we're doing and asking for help and advice and guidance among asset owners, particularly family offices and next-gen family offices who are really eager to better understand how can they find quality opportunities at scale in the impact space. So that's, I say we're an overnight success after 25 years.
Well, congratulations. So, Robert, what is your superpower?
I think it's probably the ability of not to give up. My wife always says, son, that I just never, ever give up. It doesn't matter how many times I'm knocked down, I just, get up and find another way. I'll, adapt and constantly innovate or that. So I think the superpower is that, and seeing the big picture, seeing where things are going. The problem always is that, the old expression, the pioneers get the arrows and the settlers get the land. So I think our challenge was always, how do we monetize what we have? Convening all of these people together and getting them together and kicking them. You don't always get, you don't even hear back from the people, thanks. So, can I do something for you? So that's always been the challenge, is the financial challenge of doing that. But now, because there's so much interest in the advisory side, I don't see that as really a problem. Before, it was tough. It was very, very tough. So I think just not giving up, and what you're doing this also a long time, and very few journalists were giving attention to this. They were giving, the headlines, and what most of the newspapers write about is the least important information, what the Dow Jones did today. Yeah. Most institutional investors never look at that. It's like playing tennis and you're watching the scoreboard all day.
Yeah, yeah. Well, Robert, I really thank you for taking the time to be with us. I know how busy you are. Before you go, would you take just one more minute and tell people how they can learn more about TBLI and how they can connect with you personally?
Oh, it's very easy. I'm quite accessible. My wife says you're too accessible. You have to be less accessible. So just go to LinkedIn and you can connect with me on Robert Rubinstein, or go to TBLIGroup.com. And you can see all the activity we're doing, or TBLIconference.com. You can see we're very open source. We publish, all of the presentations ever done for the last 34 times, or the attendances. Everything is very open source in that, because we want to share as much as possible. So very accessible. Just go to the website, TBLIgroup.com or TBLIconference.com. Or look for me on LinkedIn, or subscribe to the TBLI Daily. You get a free newspaper every day of the latest news happening around the world in the ESG and impact space.
Fantastic. Well, Robert, thank you very much for being with us. We wish you continued success in all the great work that you're doing.
Thank you, Devin. And you're, as my father would say, you're a real mensch. Thank you for this.
Well, thank you. Now, let's do some good.
Thank you for listening. This podcast was recorded via Google Hangouts on Air and is available at youtube.com/Devin Thorpe. Subscribe to this podcast on Stitcher or iTunes by searching for Your Mark on the World. Every weekday, Devin hosts a CEO, celebrity, entrepreneur, or other changemaker here on the Your Mark on the World show to inspire and prepare you to make your mark. Devin is a champion of social good, writing about, advocating for, and advising people who are doing good. He is a Forbes contributor who is a recognized thought leader in social entrepreneurship, impact investing, and crowdfunding. To book Devin as a speaker, visit devinthorpe.com. Learn more about Devin's work at yourmarkontheworld.com.